Bitcoin has just fallen nearly 18% in the past month, crashing from over $126,000 to just above $100,000. Ethereum's down even harder, dropping 27% in 30 days. Every major chart is bleeding red right now. And as the US government shutdown drags on, confidence is evaporating across risk markets. Stocks are wobbling, liquidity is freezing, and suddenly, the optimism that defined the first half of 2025 has turned into full-blown fear. Everyone's asking the same question. Is this the start of a new bear market, or just a brutal reset before the next leg higher? Because according to on-chain analyst Willy Woo, this isn't just another crypto correction. It's a full-scale macro stress test. He believes Bitcoin's fate now depends on how it performs when global liquidity breaks down, not just when retail sentiment turns sour. In this video, we'll break down Woo's framework for understanding where Bitcoin really sits in the cycle right now, what the recent crash actually revealed about traders versus holders, why Woo believes we're nearing the next phase of the everything bubble, unwind, the three overlapping cycles driving Bitcoin's long-term behavior, what survives a 2008-style liquidity shock, and the nightmare scenario, what happens if this downturn drags on for a decade? Because in the middle of this panic, Woo argues one thing hasn't changed at all. Bitcoin's long-term thesis, the reason it exists, is being proven, not broken. But before we continue, if you want to stay ahead of these macro shifts, make sure you're subscribed to The Crypto Nutshell, our free 5-minute daily newsletter read by tens of thousands of investors who want sharp, actionable insights without the noise. Check out the first link in the description. All right, let's get back to the video. Let's start with what just happened. Over the past 4 weeks, Bitcoin's price has been crushed by a wave of liquidations. Billions of dollars in open interest vanished overnight as traders scrambled to cover leverage positions. Ethereum fell harder, altcoins fell worse, and sentiment across crypto Twitter collapsed into despair. But while short-term traders panicked, long-term holders barely moved. Willy Woo calls that the defining difference between the surface layer of Bitcoin and the foundation beneath it.
The interesting thing is most people get shaken out on the surface level. 10th of October, Trump tweets, nasty things about tariffs to China, and all the capital markets crash. It was on a Friday. Some of it vented out risk off into crypto because it's 24/7. Nailed all the altcoins and shitcoins. Bitcoin held up, but it was pretty. But that was just liquidations. That was like,
was it $19 billion in a single 24-hour period?
Yeah, something.
The highest monetary value for any liquidation period.
Yeah, more than
ever.
FTX, more than ever. It was the number one. I've heard 19, 22, something like that, billion. Mainly in altcoins, not Bitcoin. It did sweep some of that, but mostly it was altcoins because the liquidity wasn't there. But that was all traders playing trader games. And it was not the hodlers in cold storage. I messaged Max Kai, DebiFi, so how many of your borrowers, these guys that are borrowing fiat, you're fronting Bitcoin collateral, how many of them got into liquidation? I said, none. It was just another day, it didn't affect the long-term holding, but we can be shaken out by fear of this sort of short-term stuff.
Do you think that's extremely bullish for Bitcoin that yet again we've had a huge market reckoning? Alts did what shitcoins do, got completely wrecked, and meanwhile Bitcoin's virtually recovered.
I think so. I mean, the institutions are coming now, right? And it's important they see this. Like, I don't think institutions understand that altcoins are technology. They're like your startup that one day hopes to be on the NASDAQ. And on the other side, you have a monetary asset that's going for the size of the world economy.
On-chain data confirms it. During the sell-off, a large portion of long-term holders barely budged. Lenders who hold Bitcoin as collateral didn't experience mass liquidations. To them, it was business as usual. That's what Woo means when he says most volatility is surface noise. The traders fight over every tick, while the deep ocean of long-term capital, the true believers, the institutions, the cold storage whales, barely stirs. This is why Bitcoin keeps recovering after every supposed collapse. It's not because traders suddenly get bullish again, it's because the base layer of holders never leaves. Altcoins, on the other hand, behave like venture-stage startups, fragile, illiquid, and dependent on hype cycles. When fear hits, they implode. And this latest crash proved that once again. But Woo warns that what we're seeing now is still just a crypto stress test. The real test will come when the entire global system starts to creak under pressure. And he thinks that's exactly what's happening right now. The government shutdown isn't just a political story, it's a liquidity story. Federal spending has slowed, contractors aren't being paid, and cash flow through the economy is tightening. Meanwhile, high interest rates are freezing credit markets. Corporate issuance is falling, even tech equities are rolling over. Willy calls this the early stage of the everything bubble unwind, the same type of systemic reset we saw in 2001 and again in 2008.
What do you think will precipitate another bear market? Because at the moment, we haven't really had any kind of euphoria in Bitcoin. It's just been, leg up consolidation 3 times over now since the bottom of the bear market. And so that, I guess, indicates to me that there isn't any kind of excessive exuberance, confidence, rather optimism about the future. And so I don't personally see a reason for the kind of bear markets that we've seen in the past. But how do you see that? And what do you think would precipitate the beginning of something like that?
I think that where we are in global macro, and people talk about the everything bubble. I think if that turns and the everything bubble pops, and the last time was 2008, before that was 2001, the dot-com crash, then everything will be stress tested. And I'm not saying just Bitcoin and crypto, I mean world financial markets. Liquidity is going to pull out of the system, buy-sided liquidity. No one will want to buy. They want to run to safety. It's called a flight to safety. Everyone runs to the US dollar, and then gold afterwards. You can see gold starting to rip, right? That's telling you warning bells on the economy.
It's been happening for almost 3 years now. So gold and Bitcoin bottomed around about the same time. I think gold may have preceded the Bitcoin bounce. Maybe they happened at the same time. I can't quite remember. But they've been rising.
Yeah, because like gold's and it's in a divergence, and very seldom. It's a very, very, very seldom you see this kind of divergence with gold and the rest of the economy. And last time was the year 2000, before the dot-com crash. Before that was 1971, the stress test that created fiat. And before that was 1929.
So we're now seeing long lines of people outside of gold dealerships, or whatever they're called, to buy gold bullion.
Yeah.
Is that a top sign or signal? Because
we're
suddenly seeing quite a pullback, right?
Yeah, I think gold's going to cave as well, like it does in a flight to safety. If we have any structural sort of breaking of the TradFi markets, it'll be like 2008, a little bit like that, but like 2001. Well, 1929, well, I don't think it'll be 1920. 1929 was the Great Depression, everybody. Right, the markets are quite different now, but that's what gold's telling you if you're a gold trader. So,
do you think gold will be impervious to?
No, it'll pull back. It'll pull back. Gold. I got my ass handed to me in 2008. I was long to the gills gold. It was the right bet, but you forget that when the whole thing unravels, everyone runs to the US dollar. They sell everything, unwind all their positions. It's called deleveraging. Dollar goes to the roof, in relative, the Dixie goes to the roof. Gold strength relative to other markets. Dollar strength relative to other markets go through the roof, meaning that you can buy more with your dollar. And then, gold was the first to recover, and it went on all the way out to 2000 to the 3 to 4 year perpetual bull market. So, gold is the right asset in this time. And we want to see how Bitcoin performs. It's a really good test because now we've got institutions here and we've got global macro investors and traders in there. How does it perform? Is it going to perform like the NASDAQ, or will it perform like gold? Because we say it's got the properties of gold. In my opinion, it's got more. It's what gold wanted to be. But it takes time, 16 years is not long enough.
He points to gold as the early warning signal. While risk assets slide, gold has been quietly diverging upward, something that's only happened before major macro breaks like the dot-com bust, the end of Bretton Woods, or the Great Depression. And Bitcoin, for the first time in its life, is trading alongside both of these worlds, the speculative risk markets it grew up in, and the hard asset markets it was designed to join. Woo's base case is realistic. If the everything bubble truly pops, nothing escapes, liquidity evaporates, and investors sell whatever they can, even Bitcoin. But he argues that's not what defines the outcome. The recovery pattern does. Does Bitcoin behave like the stock market, a leveraged risk asset that needs stimulus to survive? Or does it behave like gold, volatile at first, but ultimately rediscovered as a store of value when confidence in fiat collapses? That's the question this next phase of the cycle will answer. For years, the narrative around Bitcoin has centered on a single cycle, the halving. Every 4 years, supply cuts in half, scarcity increases, and prices rise. But Woo says that's only one layer of the story, and focusing on it blinds investors to the much bigger picture forming underneath.
There's a halvening cycle, which is we all know the halvening, the supply shock. There's a 4-year liquidity cycle, which is central banks printing money on a 4-year cycle. And so that's been Bitcoin for 16 years. And then the last cycle was the business cycle. And Bitcoin was invented off the back of 2008 world financial crisis, which was the last ending of the last cycle. And those are the three. And we've never seen the business cycle. And this is what I'm alluding to in this conversation. So,
where do you think we are in the business cycle?
On the verge.
On the verge of breaking down?
Yeah.
Interesting. Okay.
The economic indicators have fired. Henrik Zeberg does a lot of this work, and I've seen his data and his signals, and it's very compelling. It's not just one; it's key macro indicators that all point to this. So the question is when, not if. And this was very clear to investors in 2007 as well. The indicators were clear. Gold was starting to rise. The numbers were looking bad. People were starting to put positions on banks. It wasn't a surprise, actually, to a lot of investors. It took the rest of the world by storm because everyone was sleeping at the wheel. The whole thing was over-leveraged.
He explains that Bitcoin operates within 3 overlapping cycles: the halving cycle, the well-known supply shock every 4 years, the liquidity cycle, central banks tightening and easing on a similar 4-year rhythm, amplifying Bitcoin's highs and lows, the business cycle, the broader economic rhythm of credit, consumption, and confidence that drives the entire global system. For the past decade, Bitcoin's rise has coincided with abundant liquidity and relentless fiscal expansion. It's never faced a full business cycle contraction with institutions holding billions on their balance sheets, until now. Woo notes that all the warning indicators are firing: slowing growth, rising gold, deteriorating credit spreads, and falling liquidity across markets. It's the same setup veteran investors saw in 2007, before the last big crash. So we're entering something unprecedented, a collision between the halving, the liquidity tightening phase, and a possible business cycle downturn, all at once. And if history rhymes, that means one thing: the next few months could look ugly before the real long-term trend reveals itself. When markets panic, everyone runs for the same exit: cash. It doesn't matter whether you own stocks, bonds, or Bitcoin. When liquidity vanishes, survival comes first. Woo calls fiat a stable shitcoin. Over decades, it's designed to devalue, but in the middle of a liquidity crunch, nothing beats it.
Do you think any assets will withstand a market crash in prices?
Yeah.
Which ones?
Fiat, US dollar, Swiss franc. I know this is not a maxi answer, but the reality is, because when we talk about Bitcoin, is the thing that's gonna win out of this. We're talking over a period of 10 years. Short-term volatility is what it is. Like, what was it? It was like was it a 2-3 month pullback in gold, and the flight to safety, everything unwinds. You got to wait for this whole thing. It's just like what happened a couple of weeks ago. Everything's dumping, and then it bounces back, and mean reverts. The smoke's cleared. It's still clearing. It takes 1 month to structurally repair that. And so, like, in the short term, if you want to do timing games, you be in dollars. And you try to buy the bottom, like buying the bottom of the COVID dip, But this will be slower, right? Because it's global macro. But nothing like the short term, the dollar, Swiss franc, these currencies that are considered safe, right? And then after that, buy whatever you want, whatever you understand, whatever you've done your research on. For me, it's Bitcoin because I've done the research on that.
Is the British pound a shitcoin?
Well, fiat is what would you call it? Yeah, fiat's a very interesting shitcoin. It's we'll call shitcoins going to zero, right? And of course that's inevitable because structurally they're designed to debase roughly 7% per year. It's a very stable shitcoin, no volatility. So it's a shitcoin it's a shitcoin married with a stable coin. That's what fiat is, and that has use. That is use in these, because I'm not worried about this debasing to zero over the next 2 to 3 weeks or next 3 months or even the next year. I'm worried about the markets crashing 80% on me or 30%. Don't hold this, stablecoin, shitcoin, fiat, for the course of a decade. I mean, everyone knows that, but it's the time frames. I think that's the misunderstanding in most of the ecosystem is the time frames. Like when you said up and now it's down, well, the time frame.
In 2008, even gold collapsed temporarily as funds deleveraged. In 2020, the same thing happened. Everything sold off before stimulus arrived. Bitcoin is likely to follow that pattern. Short-term panic, sharp drop, then recovery as central banks inevitably do what they always do, print. That's why Woo constantly reminds people to think in time frames. Short term, fiat wins because it's liquid and safe. Medium term, central bank responses inflate hard assets. Long term, scarcity and durability win, and Bitcoin sits at the top of that list. So yes, if the government shutdown deepens and markets seize up, Bitcoin could still fall further. But the same event that triggers that drop could also ignite the next bull market, once policy flips from tightening to rescue mode. That's how every macro crisis works. Liquidity leaves fast, but it always comes back even faster. The question is, who's still standing to benefit when it does? There's one fear that keeps resurfacing every time the market turns red. What if this isn't just another typical downturn? What if it's a decade? After gold's ETF boom in 2011, the metal entered a 10-year sideways grind before breaking out again. Could Bitcoin face the same fate?
If something played out similar to what happened with the gold ETF approval, where it just went on like a 10-year run and then almost a 10-year bear market, what happens to the Bitcoin ecosystem then?
Oh, I think it would be a good test, It's a long test, but, the people behind Bitcoin are pretty strong. I think the tourists will leave. The tourists will leave. The people who are, it'd probably be very healthy for the ecosystem, actually. It'd be very healthy, yeah.
You think a prolonged bear market would be healthy for the ecosystem?
For the Bitcoin, the network. Not Bitcoin for the investor. We probably lose adoption and we'd lose like decades of whatever. Adoption only happens when number goes up, typically, yeah.
Yeah, I think it would be catastrophic, like borderline critical, if we had almost a decades long bear market.
Yeah, you might.
Look, everyone's forgotten about gold until the last 2 weeks. Retail suddenly woke up, and it's only because sovereigns are buying, right? Sovereigns are buying for strategic reasons.
Yeah,
but
they've woken up because of the last few weeks of it, but they've been buying since last cycle.
So sovereigns have,
yeah,
sure, but retail has just woken up. And when I think about Bitcoin adoption, for sure, institutions are a part of that. But my heart is in retail adoption. I want retail consumers, citizens,
me too,
to invest. And I'm like, so when I think about it, I'm like, okay, there'll still be capital allocation from institutions, investors, traders, all that sort of thing. But I just think all that retail momentum will be sapped away. I don't think it can survive such a prolonged bear market. Like we lose so much momentum in just a 12 months drawdown, right? They don't come back for another 3.5 years after that.
I think you said it though, with gold, they've come back in over the last few weeks in gold. Bitcoin can go away for 10 years and the hardcore Bitcoiners will be around. And I know a lot of Bitcoiners will be really happy to buy those Bitcoins, really like talking to Brad Mills the other day, right? He's like
irrepressible.
He's like, it's like, oh my God, Bitcoin at X price. Or rubbing his hands together. So what can I mortgage? So we have a lot of people like Adam Bax put in a bid on Bitfinex or one of the exchanges to buy up all the available Bitcoins at
zero, 1 cent, 1 penny.
Yeah, something. And I think someone else was a whale panda, said I'll do 2 cents. I don't know, something like that. But all it'll take is for the price to run up again, and everyone will be back. I think it'd survive 10 years. It'd slow the adoption for sure.
Woo doesn't rule it out. A 10-year bear market would devastate retail participation. Projects would die, builders would quit, and mainstream attention would vanish. But paradoxically, it might be the healthiest thing that could happen to Bitcoin as a network. Speculators would disappear. The people left behind would be those who truly understand Bitcoin's design and purpose. He compares it to gold's own history. When retail forgot about gold, sovereigns and institutions quietly accumulated massive reserves. Then, when price momentum returned, retail rediscovered it, and the cycle started again. Woo expects the same rhythm for Bitcoin. If prices grind sideways for years, institutions with long-time horizons will keep buying. Hardcore Bitcoiners will keep stacking. And eventually, once confidence returns, retail will flood back in, usually at the top, as always. So while a decade of stagnation would be brutal psychologically, it wouldn't kill Bitcoin. It would refine it. It would harden the ecosystem into something even more anti-fragile. So where does that leave us right now, in November 2025? Bitcoin's trading just above $101,000 after a near 20% monthly slide. Ethereum's down over 27%. The government shutdown is choking liquidity, and fear is everywhere. Yet under the surface, the same long-term pattern persists. Cold storage balances are stable. Institutional holders aren't selling. On-chain activity shows conviction, not capitulation. For Woo, that's what matters most. This isn't a collapse in belief. It's a recalibration of liquidity. In the short term, expect more pain. Markets could easily push lower before policy shifts. But over the medium term, the next liquidity injection, whether it's fiscal stimulus or central bank easing, will likely reignite the cycle again. And in the long term, every crisis like this has the same outcome. Fiat weakens, hard assets strengthen, and Bitcoin's role as digital collateral becomes harder to ignore. Woo's warning isn't meant to scare, it's meant to ground expectations. Bitcoin doesn't rise in a straight line. It grows through stress tests. Each crash shakes out the weak hands, hardens the network, and brings it one step closer to maturity. So yes, the charts look ugly, the headlines are grim, and the sentiment is broken. But that's exactly where every great accumulation phase begins. Because if history is any guide, when fear peaks and liquidity finally returns, that's when Bitcoin stops acting like a tech stock and starts acting like the foundation of the next monetary era.